Welcome to my channel. Today's class is about the classification of activities for the preparation of cash flow statement. We know that various activities of an enterprise result into cash flows. That is inflows or receipts and the outflows that is also known as payments, which is the subject matter of a cash flow statement. As per Accounting Standard 3, these activities are to be classified into three categories: operating, investing, and financing activities, so as to show separately the cash flows generated or used in these activities. This helps the users of cash flow statement to assess the impact of these activities on the financial position of an enterprise and also on its cash and cash equivalents. Cash from operating activities. Operating activities are the activities that constitute the primary or main activities of an enterprise. For example, for a company manufacturing garments, operating activities are the procurement of raw materials. That means the getting of raw materials, incurrence of manufacturing expenses, sale of garments, etc. These are the principal revenue activities or the main activities of the enterprise, and also these activities are not investing or financing activities. The amount of cash from operations indicate the internal solvency level of the company. Internal solvency means the amount that is used for paying the liabilities. And it's regarded as a key indicator of the extent to which operations of the enterprise have generated sufficient cash flows to maintain operating capability of the enterprise, paying dividends. These are the liabilities of the company, and this amount cash from operations is used for paying the liabilities, that is making of new investments, repaying of loans without recourse to external source of financing. Cash flows from operating activities are primarily derived from the main activities of the enterprise, as discussed earlier. They generally result from the transactions and other events that enter into the determination of net profit or loss. Examples of cash flows from operating activities are cash inflows from operating activities, that is the cash receipts from the sale of goods and rendering of services, cash receipts from the royalties, fees, commissions, and other revenues. Then cash outflows from operating activities. We have to study all these. What are the items that is coming under the cash inflows from operating activities, then the items coming under the cash outflows from operating activities. Then cash outflows from operating activities. Cash payments to suppliers for goods and services, cash payments to or on behalf of the employees, cash payments to an insurance enterprise for premiums and claims, annuities, and other policy benefits. Cash payments of income tax, unless they can be specifically identified with the financing and investing activities. If it is specifically identified under the financing and investing activities, it is shown under the cash outflows or inflows from the financing or investing activities. Otherwise, it is shown under the operating activities. The net position is shown in the case of operating cash inflows. An enterprise may hold securities and loans for dealing and on trading purposes. In either case, they represent inventory specifically held for resale. Therefore, cash flows arising from the purchase and sale of dealing or trading securities are classified as operating activities. Similarly, cash advances and loans made by financial enterprises are usually classified as operating activities since they relate to the main activity of the enterprise. Cash from investing activities. As per Accounting Standard 3, investing activities are the acquisition and disposal of long-term assets and other investments not including cash and cash equivalents. Investing activities relate to the purchase and sale of long-term assets of fixed assets such as machinery, furniture, and land and building, etc. Transactions relating to the long-term investment are also investing activities. Separate disclosure of cash flows from investing activities is important because they represent the extent to which the expenditures have been made for resources intended to generate the future income and cash flows. Examples of cash flows arising from investing activities are Cash outflows from investing activities. Cash payments to acquire fixed assets including intangibles. Intangibles are those that cannot be seen or felt. And capitalized research and development. Cash payments to acquire shares, warrants or debt instruments of other enterprises other than instruments those held for trading purposes. Cash advances and loans made to third party other than the advances and loans made by the financial enterprise wherein it is the operating actress. Then cash inflows from investing activities. As discussed earlier, the cash inflows and outflows from the particular headings, that is operating, investing or the financial activities, have to be studied. Then only we can do the problem properly. Cash inflows from investing activities. Cash receipts from the disposal of fixed assets including intangibles. Cash receipts from the repayments of advances of or loans made to third parties except in the case of financial enterprise. Cash receipts from disposal of shares, warrants or debt instruments of other enterprises except those held for trading purposes. Interest received in cash from loans and advances. Dividend received from investments in other enterprises. Then cash from financing activities. As the name suggests, financing activities relate to long-term funds or capital of the enterprise. Example, cash proceeds from the issue of equity shares, debentures, rising long-term bank loans, repayment of bank loan, etc. As per the accounting standard 3, financing activities are activities that result in the changes in the size or composition of the owner's capital, that including the preference share capital in the case of company and borrowings of the enterprise. Separate disclosure of cash flows arising from financing activities is important because it is useful in predicting claims on future cash flows by providers of funds, both capital and borrowings to the enterprise. Examples of financing activities are cash flows, inflows from financing activities, cash proceeds from issuing shares, equity or preference, cash proceeds from issuing debentures, loans, bonds and other short-term or long-term borrowings. Then cash outflows from financing activities. Cash repayments of amounts borrowed, interest paid on debentures and long-term loans and advances, dividends paid on equity and preference share capital. It is important to mention here that a transaction may include cash flows that are classified differently. For example, when the installment paid in respect of fixed asset acquired or deferred payment basis includes both interest and loan, the interest element is classified under financing activities and the loan element is classified under the investing activities. That is, one transaction has the amount should be shown under two different headings. Moreover, same activity can be classified differently for different enterprises. For example, purchase of shares is an operating activity for a share brokerage firm, while it is an investing activity in the case of other enterprise. So, we have to take into consideration which enterprise is before we prepare the cash flow statement. Then the items that coming under the cash flows and outflows, cash inflows and outflows under the operating, investing and financial activities are given in the form of a flow chart. Study well. Okay, that's all for today. Thank you.